And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the Market Forecast. Today is Tuesday, the 22nd of February, 2/22/22, all twos across the board this morning. My name is John. Thanks for trusting me with your time. As always, we're going to be seeking accurate context, good risk management, and thinking about exercising good patience. If you're in the markets already this morning, hopefully you've got things going your way. Things are certainly interesting in the markets today. We do have some economic numbers due out this morning, and some of them might be actually pretty impactful. 8 o'clock Central, we have the Case-Shiller Home Price Index due out. We also, at the same time, have the FHFA Home Price Index. We'll see how things are going as far as sales in the housing industry. Might be a little bit of inflationary information there for us. At 8:45 Central this morning, we've got a prelim look at the PMI composite numbers. And then 9 o'clock, consumer confidence. If I remember right, the last consumer confidence number was a bit of a market mover. So we've got to keep our eyes on that information coming out today. U.S. stock indices opening lower, steady to lower, far from overnight lows after the Russian escalation of tensions in Ukraine. Our stocks really lower. We're basing that off of settlement from Friday because yesterday was a non-settlement day. But if we look at where yesterday closed and where we're going to be opening today, it looks like stocks are actually opening higher. Crude prices have rallied, but natural gas in the U.S. remains stable. It's going to be interesting to see that in the charts this morning. Home Depot and Macy's both beating expectations this morning, kind of headlining a long list of earnings due out today. Data is thin. Again, yesterday was a non-settlement day, so we don't have any new settlement prices. We don't have any open interest information. Even the final from Friday is not out yet. So we're going to have to wait to see that. We're going to have to wait till tomorrow to see what kind of open interest we accumulated yesterday, which I'm really not expecting much. There was very low volume, very low liquidity as we expected. Hopefully you didn't get caught up in anything whippy. As always, make sure you hit the lucky like button, share, comment, question, feedback. Heckling and love are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel, and thanks again for helping us get to 15,000 subscribers on YouTube. Thank you again very much. All right. There's a tail sticking out. Yeah, that was my office partner. Now she's sleeping right behind me, or just laying on the floor right behind me. Checking the VIX, the dollar index, and the 10-year yield this morning. VIX is up about 6.5% this morning, 29.56. Dollar index slightly lower, 95.97, and the yield on the 10-year 1.94%. As always, want to say good morning to everybody. Thanks for joining me this morning. My brother Rick, first one in the room. Rick, you win the prize. I love you. Zorain, Alessandro, Jay, Crockett, Theo, good morning. Kirill, Shaw, Brian, Chris, Marcelo, Jimmy, good to see you. Spencer, yeah, ES failing to hold above settlement. Looks like an interesting spot for you. I analyze, you trade, good morning. Dead letter opener, feels bad, man. Of course, I know I'm constantly praying for peace. Alfred, good morning. Terry, Vince, good morning. Andres, Rusty Golfer, that's me. Luis, good morning. Mirik, Deanna, Floyd, good morning. Where'd you go? Oh, there you are. Trading Research, good morning. Laura McLaren, good to see you. Denise, good morning. Three Lions Insight. Jay, Jeff, Frederico, Brett. The tail sticking out behind. She's laying down now. She's quiet. It's raining here, so there's not a lot of people walking by with their dogs, walking their kids to school. So she's had a pretty quiet morning. Good morning, Drew, Janus, George, Adrian, Rob T. Jerry is awake. Hopefully John is too. Bill Phillips, U.S. stock market and options. Good morning. Ricardo, good morning to you as well. All right, so we've got our work cut out for us this morning. When there is an early close, when it's not a non-settlement day, it always seems to throw a horseshoe into anything that I'm looking at in the market. So I want to try and really stay patient. Greetings from Greenland. Ulenak. Hopefully I didn't beat that up too much. Good to see you. But it always seems to kind of throw a horseshoe into things because I don't have settlement. I don't have open interest and volume information from the previous session. So I've got to stay patient. We're going to take a look at what we see in these charts, and we do want to remember, trade what we see. Thank you, Denise. Yeah, that's on loan from my brother. That is the 30-year bond pit at the Board of Trade many years ago. That's where my brother was working at the time, and there's actually two of them that give more of a broad view of the 30-year bond pit. I'm glad you're enjoying it. Okay, your daily max and how many trades you allow before calling it quits. Well, Syed, daily loss, it may not be financial. It may be sometimes if I have 3 consecutive losing trades, something is not right. I'm missing something. I've got to readjust and take a look at things. So I'm at least going to take a break there. But the max number of trades really depends on the market state. If we're in a trending market, it may be one trade that stays on all day. If we're in a ranging market state, I may get several rotations from high to low and low to high, be a little bit more active on those types of days. So really depends on context, as everything does in trading. It's all about the context. All right. Speaking of context, we're going to jump into the charts now. We're going to start with the daily in the S&Ps. Let me get everything set up here for us. Let's dive in and see what we see. Sorry about that. I hit the button and I thought it opened the mic and it did not. So I apologize. We'll start over again. Sure. Paging Dr. Hoagland. All right. So back to the daily. All right. It's always something. So yesterday we had the weekly kickoff low tested in an abbreviated session. The market got within 9 ticks of it yesterday. It's a non-settlement day. That always complicates things a little bit. I don't have volume information. Look at the volume yesterday. Dead. No participation. We don't have any open interest information, even from Friday or yesterday or today. We're going to find out the information from Friday today. We're going to find out the open interest information from yesterday and today, tomorrow morning. So there's a delay in the gap in the information that we're used to seeing. One uncertainty we know is lifted. We know that now that Russia is planning on going into Ukraine. It was a question before. Now we know. The market actually seems relieved to know this. Take a look at the 30-minute chart. So here's one of the complications. We're still basing everything off of Friday's settlement, 43.43 even. When we look at the activity from yesterday, again, with very low volume, we finished the day down here. We opened last night here, and we've been pretty much rallying ever since. So to say that the market is opening lower or steady to lower, is it really real? Is it true? Do we go off of an assumed settlement from yesterday? It's not a settlement day according to the exchange. What do we look at? So I'm basically looking at an overnight inventory. Last night we opened down here, we're trading here. Our overnight weaker hands traders are holding long positions. Maybe they didn't like what they saw down here below weekly kickoff low, traded to it, opened below it, used it as resistance, broke out above it, became support, and now we're opening potentially with a gap above yesterday's range. But does yesterday's range matter? Very low volume. I'm going to treat it as though it is a normal trading day. Even though there was very low participation, very low volume, it still exists in time as a range that was established. We're opening with a gap above that range that puts us back to Friday's settlement. Spencer noticing, boy, it seems to be having trouble getting above that. It can be an interesting spot. It's also the naked point of control from Friday, very close to it. So I'm going to be looking at this. Okay, what do I have? What kind of context do I have? I have overnight inventory to the long side, and I have a possible gap on the open. That's going to help me a little bit in the idea that it gives me a little bit of a strategy. If we can't close the gap relatively early, we may bring in more buyers and continue this market to the upside. If we close the gap, that could become support. But if we get back into value from yesterday, again, the value area special situation play could come in to fruition. That is, we open outside of range from yesterday. We enter and re-accept value from yesterday. At some point during the session, there's a likelihood that price could visit all the way to the other extreme of value, which would put us basically right back down here, right around 4,300, a big fat round number. The gang's all here today, ladies and gentlemen. We're going to see a lot more volume today as traders adjust to and respond to new information. 8 o'clock, we've got some of that information coming out. What time is it now? Let's jump into crude oil real quick and take a look at what we're seeing on the daily. Of course, yesterday we had a move that was basically a settlement equals kind of a close. Yes, Casey. Settlement is where the market is marked to for the exchange to manage margins. Big fat round number and Hoag's 80% play. Make it a 65% play, rational investor. Good morning to you, Brian. So the move yesterday, right, basically to weekly kickoff high. These weekly kickoff highs are important inflection levels in that I believe longer, stronger money will be tempted to or required to enter the marketplace and adjust their inventory. When they adjust their inventories, they're adjusting a lot of inventory, and they can certainly move the market. So we end up with a close here. We open with a gap, day session gap. We don't see those that often, but there was a longer period of time between when the market closed yesterday and when the market reopened at 5 o'clock last night. The March contract expires today, so we won't have to worry about rollover for another 2 to 3 weeks. Supply remains in question. The upside structure still remains intact. We're looking at this 93 level as a pivotal level. That's that weekly kickoff level. Take a look at the 30-minute chart. Yeah, of course, it's probably going to be a large opening range. So here's our day session gap. Okay, if we're thinking about where price is according to settlement from Friday, we've got a whole lot of longs, short time frame longs in this market. They are looking at 93 as an area where we may see longer, stronger money move into or out of this market. If we've left the opening range basically here at the high, well, the high of the opening range here at an important inflection level, that can tell us, hey, this is a pretty decent opportunity. Here's the 1 minute chart. Of course, we now know that it's a large opening range. Holy smokles, that is a large opening range. 41 ticks, something like that. So we did take a look down below it. If we put our stop down there, we're short, but I'm not doing that. I'm looking more for an opportunity for price to come back into the opening range to help me limit risk. If it doesn't happen, it doesn't happen. But this is a lot of risk. I'm not comfortable with that amount of risk. So I have to wait for the market to come back inside to give me the opportunity to limit risk closer to the other extreme of the opening range. Yes, holy smokles. Yeah, you're right, Spencer. Sometimes the exchange kind of sets settlement prices. So here we go. If we're short, we may be in a good position here. We don't know. Just some pretty good volatility here right off the open and a big opening range. So again, I'm looking more towards the halfway mark to look for my entry there, because then I can risk only about 20 to 25 ticks on this rather than risking 50 ticks on the open. Be cautious. All right, let's look at the Nasdaq, which is basically almost exactly the same picture as the E-mini S&Ps. As a matter of fact, on my notes here, it says see the S&Ps. Weekly kickoff low tested on the way down yesterday on the abbreviated, very low volume, low participation session. Non-settlement day, of course, definitely complicates things. Weekly kickoff low is going to be somewhat pivotal this morning. We've moved considerably far away from it. Take a look at the 30. Yes, it is an industry term, holy smokles, as well as oodles. So here's the move down to weekly kickoff, opening, using it as resistance, coming above it, using it as support, coming up, looking like we're opening with a gap, having trouble getting back to settlement. All of the things that we were seeing in the S&Ps, we're seeing in the Nasdaq. Makes sense. Sometimes they are kind of like we're trying to wrangle kittens. One's going one way and others going the other way. Today, we've got things kind of in line. Some news like we got last night with Russia and Ukraine can bring things in line, of course. So we're looking at the same situation. Are we going to accept value from Friday? Are we going to test the weekly kickoff high? Are we going to test the settlement, which, by the way, is 13,996. We've got a point of control just above that. Really, really, 14,000, another big fat round number, may come into play for us. That is the volume point of control. markets tend to kind of retest those levels. So, again, everybody's back at the party. We've got full participation today. Little bit of confusion due to the non-settlement day from yesterday. Looking at this as an overnight inventory to the long side. If we can't close the gap, that may mean that we've brought maybe some stronger buyers into the marketplace off of weekly kickoff low, and we can see the market heading higher. Again, value area special situation day, a possibility. One thing here. Let me go back and check on something here. Nope. Okay. Gold. Okay. Weekly kickoff high tested last night. We got 13 ticks through it before turning around and heading back to the downside. This is a buy the rumor, sell the news type of situation. Upside structure remains. We're still looking at an additional 7,000 in open interest that occurred on Friday, yesterday, overlapping to higher range, today overlapping to higher range. The market is still exhibiting strength to a degree. How good of a job is it doing getting there? Well, our last area of balance, we have space between them. So there's still a glimmer of hope that this upside move is still relatively youthful and healthy. Well, notice I said youthful. That's another industry term. Okay. What do we have at the end of the session yesterday? And we got basically a full session for gold. It closes at 12:30. They let it close at 1:30. We open with a gap. We have overnight shorts. We have opened in a late spike to the upside. We have a late spike. The base of this late spike is another big fat round number, 1900. So we've opened in the late spike. It's showing us signs of acceptance of higher price. Whoops, hang on here. So we're going to be looking for opportunities to buy weakness. The only thing that I think is going to stop me from doing that is if we find that we get below the overnight low and show signs of acceptance down below that level. We're looking for opportunities to buy weakness for a test of weekly kickoff high in the regular trading hours session. All right. The euro, very, very low volume again yesterday inside of range. Doesn't even seem like yesterday was a holiday. That's how low the previous volume has been. We're beating yesterday's volume already in today's session, and I'm beginning to sense the fact that we may be starting to smell a little bit of change in this market. No real new information as far as open interest is concerned. We've seen open interest pretty much just go moot for the last few sessions. Take a look at the 30-minute chart. We've got our overnight very long. Okay, here's the open here. Here's where we traded up to, and where we opened maybe was a bit of a gap, but not truly a gap. Well, we find acceptance inside of value from yesterday that could bring us the opportunity to see price move back down to the low of value. Again, we're short time frame controlled here. I got to try and stay patient. Short time levels are likely to be respected. See if we accept or reject value from yesterday's abbreviated session. Settlement still down here, 113.37 and a half ticks. Not seeing great opportunity here, but I'm beginning to get that sense that there is change in the wind. 10-year overnight rejection of weekly kickoff high, important inflection level. If we had to, we'd have to say that our longer, stronger traders, if they were present at this time, just decided they weren't going to buy into this move to the upside. They were coming in to sell this stuff, which is kind of more congruent with the longer term trend. We're putting in lower highs, putting in lower lows. Got a little bit of a pullback here. It could end up showing as a bear flag, which it may end up doing as we speak today. Daytime frame gap closes. Here's yesterday. Here's today. We do not have a daytime frame gap. Okay, the market opens here at 17. No gap. We've got a whole lot of shorts in this market. Overnight inventory is very short. It's a volatile little overnight session we've got going here. But in essence, basically bringing price back into value from Friday. Settlement all the way down here. Let's extend that. So do we have weaker longs that have capitulated, or do we have weak shorts that are holding inside of value? Lots of questions in this market. Oh, geez, this isn't even the 10-year. Here we go. Here's I was wondering why I wrote day session gap, which was closed. My goodness. Settlement all the way down here. Again, a similar situation. Do we have some longs that were stuck up here that got out? Are we ending up too short here? We've got a couple of visual levels to kind of work with here. Naked points of control. These are revisited in an overnight session. I look for them to be revisited in daytime frame sessions. Apologize for the confusion with the charts here. I'm going to have to make some adjustments and shuffle things. I have a tendency to do that so early in the morning. Now let's look at the nat gas, which is a bit of a surprise for everybody. I'm thinking yesterday with the expected potential unrest overseas, we ended up kind of closing the abbreviated session above an inflection level. We looked above it. We couldn't take out the high from yesterday. We've rejected above that session, above that inflection point. That weekly kickoff high, 1465, unable to hold above it. Take a look at the 30-minute chart. Now we're going to look at this one. Here's our move yesterday. Over the session yesterday, largely supported by that inflection level, but with no participation from longer time frame. We just got too long up here in weaker hands. Here's where we opened yesterday. Here's where we closed yesterday. We got a lot of short time frame, weaker hands traders too long. They were unable to bring in new business yesterday or in the overnight. They've capitulated. They've brought price back into value from Friday, and this is where we are. We've got a gap between yesterday's abbreviated session and where we opened today. We don't see that there's a huge effort to close the gap. Seems like this market is seeking balance and waiting for new information. Seeking balance and waiting for new information. Now, I'm going to give a quick look here and see how our economic calendar looks. Tuesday. PMI numbers, consumer confidence off just about 3.8. That's what they were looking for. That's not quite out yet. Housing indices, Case-Shiller, 0.6% higher than expected. And that's year over year, December, month over month, December, 1.5%. They were looking for 1.1%. Nothing tremendous from the HFHA. Everything came out as it was pretty much last month. So we're still waiting for consumer confidence, manufacturing PMI. So still some data yet to come out. Today is Tuesday. So we have the Coach's Playbook today at 11:30. We're going to be talking about using longer term levels for day time frame trading. Should be a good one. I'm looking forward to it. No group coaching today. So I will look forward to seeing you with the Coach's Playbook. I will look forward. There it is again. Echo. Sorry about the echo. So yeah, I'll be looking forward to seeing you for the Coach's Playbook and for the recap today at 3 o'clock. We'll see how these markets pan out. Remember, just be creative, humble, and grateful in your trading today. Please say a prayer for peace. Be good to yourself. Echo, echo. Sorry about that. I sometimes forget to do that, and still working on getting another computer to even things out a little bit better for us for the market forecast. And I've got an announcement coming up. I think it's going to be a kind of a cool opportunity for us to spend a little bit more time together. And I'm going to be asking you to make me money. Should be fun, should be interesting, and we'll let you know as we get closer to it. I'm excited about it. Hopefully you will be too. So, all right, take your deep breath. Stay humble, grateful, and creative. Get out there and profit. I'm going to step down into the proverbial trading pit here in a few minutes and trade well today. See you again, Coach's Playbook, and for the recap. I'm looking forward to seeing you there. Trade well.